Okay, welcome again to a tax ready session with Lili. My name is Kendale King. Like I mentioned, I am a CPA. I am originally from Cleveland, Ohio, but I am currently in Los Angeles, California, where I have my own firm, KCK CPA, where I help entrepreneurs and business owners grow their businesses, scale their businesses, and handle all the financials for them. I've previously worked in, Big Four in accounting, Deloitte, Siegfried Group, Netflix, ITV, and I use those experiences to help me, execute on my day-to-days. Some housekeeping is that if you're going to be asking any questions, the questions are going to be in the Q&A only chat. Okay. Okay. Wait. Donald says he can't hear anything. Can everybody hear me? Just want to make sure. Okay, solid. All right. So then, so the Q&A only chat, that's where you're going to put your actual questions. In the actual chat, again, feel free to make comments and everything, but I will be looking at the Q&A only chat when I am responding to questions. And I, have a history of trying to answer every single question possible. Okay. So, but we will do that at the end. But yes, this will be recorded where you can watch this afterwards. The presentation is about 40 minutes or so. And then questions, I go until I can answer the rest of them. Okay. So I'm going to go through. Please don't think I'm ignoring you. I'm just waiting. I'm just trying to push through the actual content, and then we'll be able to, have all the questions answered at the end. But in this session, the goal is to get a baseline understanding so that you can feel confident about moving into this tax season as an entrepreneur. We're going to learn about the documents you'll need, your responsibilities, what the expenses and deductions may come from your business. Just talk about some things that, are very, natural to just businesses in general. You're going to understand the different types of tax forms. And obviously throughout the presentation, how Lili can help specifically. Okay. All right, so moving on. First off, what is Lili? Lili is the one platform from your business finances. So it is the banking, it has tools and, software to help you with your accounting and software to help you prepare for your tax, your tax preparation, your tax planning goals as well, if you, utilize some of the features. And so all of these work very seamlessly together to have that one-stop shop for you. And if you are utilizing your banking with Lili, and that's your sole bank, you honestly will be able to kind of do the whole shebang of your, tax season utilizing the software. So we're going to learn more about that as we go on. But where do you actually start? The thing is, obviously, when you make income, you are taxed on that income. So depending on your age, your filing status, and dependents, the gross income that you have to make essentially to then be required to file taxes is about $14,600. But for self-employed, taxpayers, usually that threshold is a lot lower. My recommendation is that you file your taxes whether you owe or not, because even if you have a business loss, filing that tax allows you to hold that loss and carry it over into future years when you may have profit, and then you can reduce it. But if you don't file your tax returns in the past, when you don't, then you won't have that go through. Okay, so that is important to note. And when we're looking at what tax responsibilities that we all have out there, it's actually quite a bit. It's not just the IRS and the state. That's what we're going to mainly talk about, in this presentation. Is mostly about just general deductions and everything, and specifically the IRS federal income tax. But understanding that you have to do that, via a quarterly estimated payment. So paying your quarterly estimated taxes. You have self-employment taxes that you are, going to be subject to depending on your business. There's also employment taxes, payroll taxes if you have employees. There's going to be a state income tax, depending on what state you're in. You may or may not have that. In addition to that, because you are a business, you most likely are going to have a franchise tax, which is a tax charged by the state that you created your business in that charges you essentially for running your business. And then you have this sales tax, depending on your type of business as well, because you can also be taxed on, the products that you sell and sometimes even the services as well. So we're going to really talk about the federal income tax overall and just kind of touch on these other ones. We only got so much time, and I'm sure, everybody don't want to hear about all the ways that the government is taking money from them. So we're going to move on. All right. So documents you'll need when you're starting your taxes. Always great for your business to have your income statements, profit and loss statements. That's going to hold your business expenses and your business income. Your balance sheet is also important. That's going to give you your snapshot at a point in time of your assets and your liabilities and your equity. Payroll documents, if you have, any employees, or if you're an employee yourself for your own company or separately. And then, business asset information. I've just worked with a client where he had bought a Tesla last year. And so, getting that asset information to determine if he's going to be eligible for the tax credit for, using the electric vehicle. And then, we have bank and credit card statements as well as supplemental things to help with it. It's also great to have your last year's tax return as well, because that is an important starting point, for your tax professional or for yourself to understand, year over year. And then your taxpayer ID, which should be on, these forms as well. But, these are basically the basic documents you would need in a basic scenario. When we move into what deductions actually are, we have to understand how we run our business, right? We are in business to generate a profit. So you get this gross, income, gross profit, where you're saying, hey, I sell phones, I'm Verizon, I sell phones, and I create, I sell my phones for $2,000 a piece. Well, I guess Verizon, technically, Apple is the one who sells the phones. So let's say Apple. Apple sells the phones for $2,000 a piece, it seems. So that is income, that's revenue. And then you offset that with all your other costs, right? So they have a bunch of different costs. And basically what the IRS and the government is saying is that, hey, you had to spend money to make this money. So we're going to give you the benefit of of like reducing your gross income with those expenses. And we want to tax what you made at the end of the day. So that is essentially, you can think of it as a discount on your taxes because you've already, incurred some income, some expenses in order to generate that income. Some common business deductions it's not an exclusive list, but these are a very expansive categories: hardware and software, that's a laptop and the subscriptions that you use, or the actual software. So if you bought software on your computer, your operating system, office supplies, when you have a printer, that is a business deduction if you're using it for business purposes. Subscriptions and dues, so online subscriptions, but even your dues for memberships, professional organizations, things of that nature. Marketing. If you are spending money to market your business to generate more income, that is also an expense that you can take. Utilities. So when you're thinking about if you own a separate place or you rent a separate place for your business and you have an office and you're paying utilities there, or if you have utilities that is, I guess technically your phone bill would, filter into utilities as well. So basically any of those types of utilities that you are spending to, run your business. Client meetings, so the food and the transport, again, back to the training, your professional development, your business trips. And then these last two we're going to go into on the next couple of slides is your car mileage and your home office space, and just talk a little bit more about those specific deductions, as those are not necessarily always just a one for one. So we're going to move first into the home office deduction. So it is a part of your home that is a place of work. I actually, in our past, in our past conversation, past webinar with Lili, I had spoke on, that the IRS, general rules is that it has to be a closed space. But I actually, I got a question from the audience, and I actually did some research and realized that in some cases, if you are able to section off a place of, that is widely used by other things. So if you have a huge living room, but you section off a piece of that living room and only do work in there, that there can be an exception to that, exclusively the one room with four walls type of situation, which really helps people who have studio apartments and things like that, who don't have a separate room for it. If you can clearly show that this is a clearly sectioned off piece and you use that for work, then there have been cases where that has been allowed. But essentially, the space, whatever space that you have deemed to be, the space that you're going to be using for business, it has to be used exclusively for business. Okay. So that is a very key definitive factor. For me, I have a garage where I set up my whole office space, and that is exclusively used for business. And so for other people, it could be a spare room, like I mentioned, even cutting off and sectioning off a space in a larger room that, you maybe do other things in. That is a good place to have it. So there's two ways that you can do this. You can either do the simplified method, where it's $5 per square foot. So if the square footage of that office space, it gets capped up to $1,500, which is 300 square feet. So it caps off there if you use the simplified method. However, if you use the proportional actual method, where you are taking a percentage of your space to the total, place of your house. So for example, if my garage is 100 square feet and my total space for my house is 1,000, then I will be able to get 10% of all of the expenses that I incur to keep up this house. Okay. And yet the 1,500, these are for each year. So I just saw the question really quick. So, it is for each year that we're doing this. It's not a month. So that's why the actual method is more times than not better to use it that way instead of using the simplified method, because the IRS is just obviously going to try to, they make it easy for you, but also, it doesn't maximize your deduction. So my advice is always to do what maximizes your deduction, and, getting the utilities that you spend, your rent or your mortgage, that covers most of it right there, is like your utilities and your mortgage, right? If you have anything that you've done specifically in that space, though, that is 100% deductible, right? So let's just say you have a cleaner, somebody to come and clean your house. The amount that they charge specifically for my garage, that would be a total business write-off. However, if I just got a rate to clean everything, and they just charge me one bill, then I'll just get 10% of that if they actually clean my garage too. So thoughts like that are important to understand, and it's really good to talk with your tax professional to make sure that you're planning properly. Okay. So not too different from the home office deduction, the car mileage deduction works in a similar way. The IRS is giving you a standard, simplified way where you just take 67 cents per each business mile that you drove, and you'll be able to get that. Or you can get a percentage of all of your vehicle expenses that can, be applied to your business based on that percentage, right? So if you drove 10,000 miles in a year, and 4,000 of those miles were related to business, you would get a 40% deduction, use a 40% deduction based on your vehicle expenses. So your gas, your, the depreciation of your car, all that good stuff. You would get 40% of that. And it does not have to be, a continuous use. If you only did it one time cross-country trip, as this example is showing, you would still be able to get that 40% deduction. So again, you want to be able to have the right records and talk with your tax professional prepared to be able to maximize your deduction as much as possible. Okay, moving on. So this is a scenario to just kind of explain to you the power of utilizing deductions, right? So in example A, we have a gross profit of $120,000, right? And this is saying that you don't take any deductions. You don't spend any money on anything, or better yet, you didn't do a good job to capture all your deductions. Let's say you didn't do any. You would be taxed, just on self-employment taxes, which is 15.3%. Excuse me, for LLCs and partnerships, in which we'll talk about more. But you'll be charged the 15.3% on that gross profit. So you would have a self-employment tax amount for about $18,360. However, in an option in scenario B, you were able to come up with $35,000 of business deductions that you've used throughout the year to, to generate the income of 120, right? So that brings your net earnings down to 85,000, and now the 15.3% is applied to that. And you can see just in this very simple scenario that changed the amount of tax that you would have to pay by $5,355. So that's just the power of just utilizing and making sure that you are keeping record of what you're already spending, because it can just save you that much on stuff you already spent on, not even considering future tax planning stuff, right? And so that's where Lili is a great help, because they can help you maximize your deductions by making sure that you're categorizing everything properly. There is a way that, when you are, things are coming into your bank account, you'll be able to quickly swipe left or swipe right. If it's a personal, if it's a business, you'll be able to create put them in categories, and the system will learn and understand what the categories are. They might even suggest what the categories should be, so that by the end of the year, all of your transactions that are in your business bank account through Lili are all categorized. They also allow you to be able to use your credit card statements and bring that into and syncing those and uploading those, so that you can also categorize that. Because more times than not, that I've seen in practice, is that a lot of entrepreneurs and people that I work with, they don't actually do that. They forget that they spent money on their credit card, or they did, they spent something over here. So it's very important that you make sure to to get all the deductions you can, so that you can reduce your potential tax liability. All right, so those are your business taxes, but we're still individuals. We're still, people out here living a life. And so the IRS understands that. And so they're saying, hey, we're going to give you certain additional discounts to encourage you to do certain things, right? So that's all what these deductions are at the end of the day, is that the IRS, the government, wants to encourage certain things to happen. And so, for example, contributing to your retirement is a deduction. They want to encourage people to contribute to retirement. Student loan interest, they want to encourage you to go to school and take out student loans. And so they'll give you a deduction on that interest. Health insurance premiums, they want to make sure that you are properly insured. And so they're going to incentivize you to reduce those premiums, to use that as deductions for your taxes. And then they want to also push businesses and push commerce. And so they'll be able to deduct 50% of your self-employment tax as well. These are called above the line deductions. So after you determine your net earnings, so we did gross profit minus your business expenses to get your net earnings. After you get your net earnings, you subtract out those above the line deductions to get what's called the AGI, which is the adjusted gross income. That is a number that a lot of future credits and deductions, are dependent on, and it's kind of like your threshold amount. And so it's really good to make sure to get this, as low as possible, depending on what you're trying to do, to be able to take advantage of any other credits. Because sometimes if this AGI is too high, you'll phase out of additional deductions and credits. So moving into the below the line deductions. Okay, so the below the line deductions are basically just two categories: the standard deduction, or you can itemize. And I know the itemizing is a big conversation, topic for a lot of people. But we'll go into the below the line deductions on this slide, where the standard deduction, similarly to what I was discussing about the the car auto mileage, and even the home office deduction. They give you two ways: a simplified way and a little bit more, involved way. So the simplified standard deduction is that, they've determined these amounts is a yearly amount. They increase year over year for inflation. But depending on your filing status, you will be able to get, a certain amount of your standard deduction. So for single, it's going to be $14,600, same as married filing separately. Married filing jointly is just, adding those two things together. So that's $29,200. And then head of household, just recognizing that you take care of someone, they give you a little bit higher. Okay. Oh, sorry, I pressed the button too fast. For itemized deductions, you have the ones that most people think about, and usually we're going to go into these because these are the ones that really kind of get you over the hump. So charity deduct donations, state and local taxes up to $10,000. So, you again charge state and city taxes as well. So the government IRS is saying, hey, we understand you're paying them taxes, so we'll give you, a break as well on that, only up to $10,000. And then mortgage interest and real estate tax, that's the big one. Usually people don't get to be able to itemize the deduction because you want to choose the higher one. They don't really get to itemize the deductions because, they need a home to kind of overcome that with the mortgage interest and the real estate tax. And then, then there's also unreimbursed medical expenses. So anything that you've paid over and above your insurance would also be able to be, used as an itemized deduction. So the goal is to add up all that, all these different types of itemized deductions and see if that outweighs your standard deduction. And then you would just use the one that's the higher of the two. So let's go back to think about again where we are. So you got your AGI that we just talked about. And you subtract these below the line deductions and you'll get what is called taxable income. And this is what the figure that's going to be used to figure out how much you're going to owe. So just a quick recap. We started off with a gross profit, your income from your business. We subtracted our business expenses to get net earnings. Then from there, we subtracted our above the line deductions to get the AGI, the adjusted gross income. And then from the adjusted gross income, we reduce it even more with the below the line deductions that we just talked about to get you your taxable income. So this taxable income is the number that you'll use your tax rates to apply against in order to determine how much your tax liability is. So let's talk about that. So in the United States, I know a lot of times people talk about their tax bracket, right? Is a common misconception that if you're in that tax bracket, that all of your income is taxed at that rate. That is not the case. It is a progressive tax system. So what that means is on your first, if you're single, on your first $11,600, you're only going to be taxed 10%. Any dollar above that is going to be taxed at 12%. So if you had $20,000 that you were being taxed, that was your taxable income, then the first $11,600 will be taxed at 10%. That will never change. And then the remaining $8,400 will be taxed at the 12%. And that is, the difference instead of the full 20,000 being taxed at 12. Okay. So I know that was a common misconception that a lot of people have. But obviously the goal is to, be in the smaller brackets as possible to reduce your taxable income as much as you can. But that's how the progressive tax system works. All right. So after doing all that, we understand what our tax liability is. Now, we mentioned earlier about quarterly estimated taxes, right? Paying it quarterly. Since you're a business owner, the government puts on you an expectation that you're going to be paying your taxes throughout the year. So they do it at a minimum of quarterly. So what that means is you have to determine you have to estimate this. You have to determine, hey, if I'm going to make $100,000 this year, or better yet, an easier way to look at it is how much money did you make in that quarter, and, kind of determine how much you need to take out there. They want to get that remitted to them as soon as possible. But the one thing that Lili can do to help you with this is utilizing the tool that they have to create you a tax bucket. So what this is as money comes into your account, you can set up an auto tax saving percentage, and Lili can, come up with one for you if you don't know which one you want to do, or you can ask your tax professional what makes the most sense. But essentially, as $1,000 comes in for your business, they will take out $200 automatically and put in your tax bucket. So you would only have $800 to work with after that. And I know for a lot of people that is very helpful, to get it out of sight, out of mind, and to have that balance built up so that when taxes are due, you can pull from that and you don't have to scurry around to try to figure out how to, pay your taxes. The one thing that it does not do, it does not actually pay the taxes for you. So you do have to take that next step and actually pay your taxes using that account. But it is a great feature that helps you save and, put it on the forefront of your mind when you are, going throughout your business year. Okay. So now we talked very much so all about our federal income taxes, like I mentioned. For state income taxes, it's basically, the same type of process. It's just that different states have different rates. So depending on what state you're in, you can go to the Small Business Association website, sba.gov, to be able to determine what your state tax obligations are, so that you can always be in the know. There are some states that don't charge any state tax. There are some states that charge that does a progressive, some states that does a specific rate. So it's just good to understand what state you're in and, how they are taxing you. Moving on to franchise taxes. So with franchise taxes, again, this is the fee to operate your business in a state. And if you don't pay this, or if you don't file, you could be your business could be put into not good standing. So it's important to make sure that you are, keeping up to date with your franchise tax obligations. And usually this is either just a flat fee or a percentage of your revenue, but there's usually thresholds. So, like, for example, in California, where I am at, there's an $800 base fee, and then it grows up more than that once you hit a certain income threshold. And that you got to start thinking about. So it's important to understand your franchise taxes, and you would be able to understand that via your Secretary of State's website, your franchise websites. So we also wanted to briefly talk about sales tax. So depending on the business that you have, specifically more likely than not the product-based businesses. So you have any inventory that you are selling, you are likely subject to sales tax. And in some cases as well, some services are also subject to sales tax. So it's important to understand your state's rules as well when it comes to that, because you would have to remit those depending on your activity. You have to do that monthly. All right. So another thing, just being conscious. We've done this, for the last 2 months as well. And this goes really for any disaster, any natural disaster, federally, declared disasters. There's usually some type of tax benefits and postponements that you can automatically take, benefit of. So if you are in California, you were affected by the fires, the IRS, already announced tax relief for the individuals who are affected by pushing the dates. So instead of things that were due, the regular dates that were due, they give you automatic extension to October 15th, 2025. But the other thing, though, that I want to make sure that people know, because I've had this issue and I'm currently working through this issue, for another client of mine, is that sometimes that automatic thing, the IRS doesn't actually update their systems. So it's always good to always just send out the form as well to get an extension if you want that extension. But technically, the IRS and governments in California as well have made postponements so that you wouldn't have to actually file. You don't have to file on that specific due date. But again, just be better safe than sorry and not rely on that solely, because it's a current headache that I'm dealing with for 2023. when the fires happened back in 2023. Okay, so we're going to move into talking about business entity types. Okay, we're getting closer to the end, and I'm going to go through your questions and everything. But we are at talking about the different entity types and what forms applies to you. So when we're looking at a sole proprietorship, so you started your business alone and you didn't, file an LLC. You don't need to file an LLC to actually do business. Anytime you are doing business, you are, a sole prop. That's just the entity you're in. The LLC just gives you liability coverage. So if you're a sole proprietorship, then you would have your Form 1040, which is your individual income tax form that, everybody has to file, but you'll file your business activity on Form 1040 Schedule C. So that's where you're going to have your income, your deductions, all that stuff. Form 1040-ES, that's again just helping you be able to calculate what your business estimated taxes are. There's online forms. You don't actually have to file that form specifically, but you can use the the websites to pay ahead of time. And then as a result of Schedule C, you'll see 1040-SE, which is going to determine your self-employment tax that you owe based on your net earnings. So moving on to LLC. So your limited liability company, if you are an LLC, you basically are doing the exact same forms as as you were as a sole prop. The only, it's what's called a pass-through. So it all passes down to you on a personal level. The only thing the LLC does, again, that I mentioned before, is that it only gives you liability, coverage. It just separates you as a business versus you as a personal person. It does not give you any additional tax benefits other than, there's no tax benefits really. It just gives you the liability coverage. Okay. So that's why you're going to be doing the exact same stuff, if you were a sole prop. Moving into what does give you a little bit of different tax treatments is an S corp. So if you are an LLC that applied to be an S corp, or if you set yourself up as an S corp originally, then you would have to, file a separate tax return from your 1040 called 1120-S. That will be the form where you have your annual income and losses. So your net earnings, basically. That is going to flow down to your personal 1040 through Schedule K1. So that Schedule K1, that's going to give you basically like your business's W-2 that you are going to bring over to your personal tax return to input that information. In addition to having an S corp, because you have an S corp, you have to pay yourself a reasonable salary. And so with that being the case, you now have a W-2 that you will also be putting on your 1040 from yourself, from your business. Okay. So those are the forms that, that you would have to do. Again, you get this extra 1120-S tax return specifically for your business, and you will get that K1 brought down to you, and then having your W-2 as a requirement of paying yourself a reasonable salary. Then we move on to partnerships. So with partnerships, you definitely have to still file a separate tax return, which is called Form 1065. And you also get a K1, the same similarly with the S corp, and it just flows down to you specifically, just like the K1 did, and the LLC is done and everything to your 1040. So it's the exact same thing. It's a different form that you're filing 1120-S versus the 1065 here. Okay. So now what we do get a little different is the C corps. So in the C corp, you have your 1120, but your business, if it's a C corp, it is taxed separately. It is not passed through. So whatever your income, your end all net earnings is for your C corp, that is going to be taxed at, the corporate tax rate, which may be changing soon, but that'll be taxed at the corporate tax rate. More times than not, you're going to be paying yourself on a W-2. And so that income will be transferred over, via that W-2. And if you take money from your business, is through a way called a dividend. And that dividend is going to be taxed separately as well if you do that. So that's where double taxation comes into play, where you're being taxed on your money, on your business income twice. Once when you are for the end of the year, and then another time when you repatriate yourself that income. Okay, so how Lili can help. Lili is going to be able to take all the information that you worked on and did throughout the year and put it into its own form. So if you're an LLC, it'll populate your Schedule C. If you have a partnership, it'll populate your 1065. If you have a S Corp, it'll populate your 1120-S. Okay. So it is great to be able to have that and provide it to your tax professional, or if you're doing your own taxes, you'll be able to have that as a guide when you're filing your taxes as well. So it's just a great way to just kind of get a head start on completing your tax return for the period. And speaking of that, working with a CPA. So if you have your own, you feel very confident in what you're doing, by all means, hopefully, again, this maybe even helped you to be able to feel a little bit more confident in being able to execute your tax prep. But if you are looking for a CPA, here's some advice that I would provide is that when you find one, look for CPAs, look for referrals. Use online resources, check that they are, kosher. Consider their expertise and their credentials, for your business. When you're choosing the right one, feel free to interview them. Feel free to, look at testimonies, understand their fees and services. Think about how they specifically relate to your business as well. And also, I just ask that people think beyond just tax season, right? Ideally, having a CPA, you want to utilize that experience throughout the year, not just once a year on your taxes, when sometimes it's a little too late to be able to get some things going. So that's where tax planning comes in, and even helping you as scale your business. And with Lili Smart, one of the subscriptions that you can have with Lili allows you to invite your accountant into your account so that you can make it a whole lot easier for them to get the information and to work with them. So it just makes everything a lot easier when they have access. I also did put a link up top in the chat. If you see that, if you would like to, just kind of see if working with me makes sense, then please put, is a form up there where you can put your information in. And we can see if I can help. But I think that anybody is if you need some help, there's online resources. Again, there's friends of yours. I know colleagues that you can speak to. And again, if you even need me, I can help you point in the right direction of getting you some help. Okay. All right. So we just talked about the tax season, the different types of, ways that you can utilize, the system, but we wanted to just go back specifically on what Lili Smart can really help you do. And that you'll see at the end, we'll have a code where you can also use to be able to get the Lili Smart 30-day free trial as well. But the goal is to, use Lili Smart in conjunction with the information you received today to be able to, able to execute on your tax return. So we're going to just go into a little bit more about what the features are. So in the Lili Smart, you'll have business banking. So being able to, my favorite one here, I always, tell them is that's why it's like kind of asterisk, but I like that the fact that you can get cashback rewards anytime I'm spending money and I'm making money at the same time. I love that. But, again, they work like a regular bank, regular business banking. So you'd be able to send wires, ACHs, be able to make deposits, use your checking account, all in the system. In addition to the actual business banking, there's accounting software that is intertwined in the system to allow you to do smart bookkeeping, categorize things, sync in external credit cards as well, be able to give your accountant access. You can see, different P&L and cash flow reports as well. So it's really great to be able to use this software in conjunction with your business. And again, be that one-stop shop for your business. And then there's going to be able to give you tools to be able to help you with your tax season. So the tax savings bucket that we talked about, pre-filled tax forms as well, and then to instantly sort transactions into categories is great when you're preparing for your taxes. All right, so here is the code where you can sign up for free or try one of the paid plans for 30 days at no cost for Lili. So I'm gonna leave that up here as I go into the Q&A. So I'm going into the Q&A only now and going to just go down the list. All right, so yes, we answered that question. Never got a 1099K form from Venmo Business, but I think our taxes just go through our joint personal tax, so maybe it doesn't matter. So with 1099s, even though you did not actually receive a 1099 from whoever paid you, you still have to recognize your income. The 1099 is more so just their, like I say it all the time, is that it's just the IRS's way of getting other businesses to kind of like, inform on you. It's like, hey, here's how much money I pay this person. So 1099K, you would only get that if, you had more than like $20,000 of transactions that you received on their platform. But regardless, you still would have to report your income, even if you didn't get a 1099. Okay. Oh, you said you did make the threshold. So yeah, that's something that you can get. You can talk to them if you want that specifically, but having good records and bookkeeping throughout the year, you are ultimately responsible for filing that regardless. What's the threshold for filing if you're a W-2 employee with a side business? So again, W-2s, I always say you should file regardless. So the only real threshold is that if you don't actually owe anything, then you don't have to file. You're not required to file because, at that point, you might be able to get a deduction if you already paid via W-2. So, but my thing is always to file, just to have those records. Started my business LLC last year, but had no transactions. Do I need to file? Yep, just answer that question. Always file just to get the record. This company food expenses for employees count? It does, but in certain cases. So if you're doing a meal where you're talking about business with a client or with employees, then yes, in certain cases. Now, if you just at home, and you're on a Zoom meeting and you just talking and you just like bought the stuff for yourself, usually when it's by yourself, it does not count. But when it's with other people and you're talking about business and business focus, is usually a yes. I didn't charge any tax to my jobs. Was I supposed to? So depending on what your jobs are, you may be required to charge sales tax. So I would have to understand your actual business specifically. But so, for example, all products you should be charging some type of sales tax. But even in like I have a client that runs a convention, and conventions in the state of Texas, you do still have to remit sales tax. So we have to charge that. So yes, it just depends on, what you are supposed to, what's your actual business. If you have yet to see a profit, again, it's still good to record your, your losses so you can use it for the future. This is my first year filing jointly with wife and first time with startup costs. No income generated in 2024, less than $5,000 startup business. Both of us earn W-2 income. Will the business deduction be in addition to the standard deduction? Yes. So the business deduction is, remember what we talked about ahead, right? So you have your your gross profit minus your business deduction to get your net earnings. And in that net earnings includes your W-2 income. And then after the above the line deductions, you get to your standard deduction. So yes, you definitely want to include those business deductions. You file your business return separate from your personal return. It depends on your filing status. I know that this was an earlier question that was answered. So it depends on your entity. It depends on the entity that you're using. How do you recommend reconciling business transactions that are paid by personal credit cards? The best way to do that is to print out or export a spreadsheet of all of the expenses that you've used on your cards and literally go line by line and say what was personal, what was not personal. That's the easiest way to do it. I'm moving into selling inventory product. How do I get a license for selling product? Well, first you'll need a business, a business license to do business in whatever places you're doing, and then you'll need to get a seller's permit, tax permit. So you should be able to go to your Secretary of State's website to determine the information you need to sell whatever you're selling. So yeah, the California state also pushed the deadlines as well due to the fires. When, where, how do we go about paying our quarterly business taxes? So on the IRS website, you can go to payments, and you'll be able to remit your quarterly business tax payments there, as well as whatever state you are filing. It's all on their website. Will be able to do that, and you should be doing. They'll tell you as well as far as when, but it's like quarterly. So I believe it's in May. So not April, it's May, 3 months after that, it's like May, September, December, and January. I got it. I'll look it up. But yes, it's out there, but it's just at least 4 times a year. What if I got my LLC halfway through the year? You still need to record your expenses and stuff halfway through the year. If you had a S corp before an LLC, if you had a sole prop before LLC, technically you could try to do them both separately if you wanted to, or you can just say, try to flow it all within the same one. But yes, you still need to file them together on that Schedule C. Started my business on 126. Do I need to file form 2553 for S corp by 3/15/25 or 75 days after formation? So that 2553 S corp election form, you should be filing it as soon as possible, honestly. But there's cases where you can even file, like you can file late and they have granted you the status if you just didn't know. So there, I would say, just try by that 3/15. But if you can't make it, just try to get it done as soon as possible, and just let them know like what was the hold up for you to be able to do it. For 2025, what if you had no income? If you don't have any income for Q1, then yeah, you don't need to pay any estimated taxes for Q1. What tax forms would you fill out if your LLC is equally owned 50% between 2 owners? That's either going to be a partnership or an S corp, depending on how you guys set it up. But yeah, it's going to be either one of those, or a C corp, I guess technically as well, just depending on how you set it up. What benefits do your customers find using Lili versus other products such as QuickBooks? I think the biggest thing, obviously, is that Lili is great to be that one-stop shop, but it is newer, and it is it's not a full accounting software, and it's not trying to be that at this point in time. It's just trying to be able to fulfill the needs that you would need in your entrepreneurial business. So it is definitely a great place to start when you are getting your business bank account. I love the fact that the bank account and the accounting is seamless, because more times sometimes getting information from a regular bank into QuickBooks or any other accounting software is not always one for one and causes problems. So I like that better with Lili. If I were to sign up for Lili Smart now, would I be able to plug in everything from previous transactions? Yes, you should be able to plug in the history. What form? Hello, I have a Lili account for one of my business. Do I need to open up a separate account for another business? It might be best to just have separate accounts and have that if it's 2 separate entities for sure. But happy for Lili. I think you should ask Lili directly if they have ways you can do that and still have that separation. Okay, I have a woodworking business working out my basement that is not part of the square footage of my house. How do I calculate the house? House is 1,500 square feet, basement 500 square feet. So as long as the house is as long as that basement is included in the 1,500. So if you're saying that the 1,500 square feet is just the house and not the basement, then you would need to add the 500 to the 1,500. So it'd be 2,000 that you would be doing, to 500 over the 2,000. It needs to be in the total that you're doing. Food expenses. Question, answer early. 100% deduction. So food expenses, there's some cases where 50%, most cases now there's 50%, but there are some cases that are 100% deductions are cool, like to do. So like, for example, if you are, using your food, if you're putting on an event and you're catering food, like that's 100% deduction versus if you just go and get meals with, some colleagues, that's 50%. But yeah, talk to a tax professional with that. Again, with the food spend, what if I sell my products at markets and on the way home I stop and have dinner? Does that count since I was doing business related things? Not necessarily, because again, it's just you. So it's not, just because, it'd have been different maybe if you were at the event and you were kind of doing something there. But yeah, on your way home, if you're just catching dinner, yeah, that's not necessarily something you can get a deduction for. Can fuel be filed instead of or in addition to mileage? Yeah, so you got the standard way. The standard way is only the mileage. That's the easy, simplified way. And then the fuel can be added, when you're doing the actual expenses. So you would calculate your like registration costs, your fuel, your car wash and stuff like that. Everything that you went into the car, you'll use that that as your total, and then do a percentage based off of that. All right. Do you have S corp setup services, and is there a standard revenue you'd recommend for an S corp? Yes, I do have. I think you're asking me. Has S corp setup services, and through that I help do this S corp, also determine a reasonable salary for you and set up your payroll to start running. And your standard revenue that I recommend for an S corp is around 40 to 50K in net earnings. Oh, I see you literally had a thing on the next one. Sorry, Kira. Okay, I sell commercial safes nationwide. How do I keep up with product sales tax per jurisdiction? Yeah, there are software there's all software out there. I think it's called Avalara, sales tax software. I think even Stripe does it as well. But yeah, Avalara, Vertex. Yeah, just look up tax jar. Just look up online, and you'll see all the different types of tax softwares that sales tax software that can help. And I think again, even Stripe does something as well. What do you charge for tax preparing services? I cannot read today. So it depends on your entity, depends on what's involved. But if you sign if you do the form and to request, you put all your information in, and I'll send you a quote based off of that information, and then we can talk from there. And if it works, it works. If not, you look for something else. I can definitely send you some other information for other tax preparers as well. So quarterly business taxes are different than quarterly sales taxes. No, they're the same thing. Sorry if I'm, interchanging the words, but no, basically same thing. Quarterly sales tax. Oh, wait, sorry. Estimated taxes is all. Let me just say this plain, because I think I just even made it even more complicated. So your quarterly estimated taxes, right? That's just saying that you have to pay some type of tax quarterly. Usually that is referring to your tax owed to the IRS or your state. But there's a lot of different types of business taxes that exist out there, such as your employment taxes or your sales tax and stuff like that. So business tax technically encompasses sales tax, but it's different. So I wouldn't think about quarterly being a specific type of tax. Is more so it being a timing of when the tax is paid. The different and business taxes is just a general term of taxes that are charged to your business. So if I were using more direct terms, I would say your federal income tax, your state income tax, your franchise tax, right? Your self-employment tax, your payroll taxes. Those are specific taxes that can be business taxes. And sales tax, again, different. So I apologize if I make that complicated. How to keep up receipts if you're using a Google Doc for tracking expenses. So if you're using Google Doc and you're not using Lili, then I would say throw your receipts in like a Google folder. And one thing also is a cool, neat trick is you can utilize like a Google form. You can create your create a Google form where you create all your little questions that speaks to the expenses that you spend money on, and then you can even have an attached receipt option in there where you can throw in your receipt. So you can literally everything that you're doing in a Google Doc to track your expenses, you can just do it in a form. Fill out the form, throw the receipt in. It'll translate over to that, to a Google, Doc for you, and it'll have a folder for all of your receipts. So that's a cool way to do that. But if you're using Lili, you'll be able to attach the receipts directly to the actual bank transactions. Are bank and credit card records sufficient for records of expenses, or do you need receipts? It's the age-old question. Receipts were definitely very much necessary when people were just using cash. The IRS has not said don't keep receipts. I think that if your bank detail is explicit enough to be able to determine what the actual call what you actually bought, then that's one thing. But more times than not, a receipt is a little bit more, or invoice, or contract is a little bit more explanatory to speak to it. So I would say best practice is to always keep receipts. Okay, when does the IRS say you start your business? Is it first expense, first revenue, DBA approval date? So anytime you start opening up your shingle. So first expense or revenue, whichever one's come first. If you're actually incurring and cost to generate revenue, then yes, you are at that point in time. Your DBA approval date does not matter. Again, that's just more so to get your name, but you are still, you started doing business before, just as yourself, not as, through a DBA. All right. When doing taxes for 2020, when doing taxes in 2026 for the 2025 fiscal year, do I file taxes both personally for a job with W-2 as well as separate one from an LLC where I'm sole member? So again, everybody else still has to do their 1040. And so if you have a W-2, you'll still file on your 1040. And then your LLC will be on your Schedule C, which is housed in your 1040 as well. So you will be doing that, simultaneously on your 1040. But yes, there will be two separate schedules. Can I pay my landlord separately for my house rent and office space and deduct that office space? I will be paying her to yes. Let me think about that. Why would you do that? Can I pay my landlord separately for my house rent and office space and deduct that office space? I'm not sure I understand the question. Are you saying that if you have a landlord that's charging you rent, if you send them, $800 for your actual personal house rent and then another $200 for your office space, you don't need to do that. You can still do it on the back end. I just don't. Yeah, you don't need to do that. Okay, thanks, Dustin. I started my business last year. Do I file if I don't have any expenses? Again, always file just to have the record. That's in my opinion, just to have the record. I have no business what I need to charge sales tax for my services. You need to just determine, what state you're in, and figure out from their website if you need to do that or not. But I would say more times than not, probably not for nils, but just check your state. How many bank accounts should an established business have? That just depends on what you got going on. There's no right answer for how many bank accounts you should have. It's really just having different bank accounts is just like more of a liability thing. So you don't have everything just in one pot and then also more of a organizational thing. I know some people who have like an account for revenue come in, an account for expenses to go out, all that good stuff, but it's not necessarily needed. If I use the family car for my business, how do I prove miles driven for the work I provided? You keep a log. You keep a mileage log of, the use that you've had throughout the year. So that's how you would keep track of that. So you would say, hey, this is the business trip. On this date, I traveled from my address to this address. These were the miles that were there. And yeah, that's how you would keep track of it. I don't know, some systems help you keep track too. Okay, at what point does the IRS no longer allow deductions if not turning a profit? So they don't necessarily not allow deductions. It's just you carry them over. So you carry over to a new period. So basically it's saying if you don't have any income to offset against, so whether that's your personal prop, like personal W-2 or business income, and depending on the type of income it could be passive versus active. If you don't have any income to offset against, then that loss is suspended and carried over until you have a profit that you can offset the loss against. But it's not like they don't allow you to take the deduction. They just, you don't have anything to take the deduction against. Okay, annual report for new business. Not sure what that means, but if you mean, yeah, I'm not sure what you mean for annual report for a new business, Dustin. So if you can ask in a different way, that'd be great. I just started a coaching business and have an LLC. I made a small amount of income starting last month. What do I need to file this year? Current business account is tracking expenses and scheduling category, secluding category. Well, this year, if you just started this year, you don't need to file anything for this current tax season. But when by the end of this year, when it's over and you're doing your tax season in the next year, your tax return in the next year, you'll need to keep track of all your revenue and expenses and file that. How much should I save for taxes percentage-wise? I also take deposits. Do I need to set aside? That question depends on your income. So the way that I help clients do that is we forecast out how much income they're going to receive by the end of the year. And then we make deposits separately. So we say, hey, here's how much we think you're going to make by the end of the year. And if you don't want to do any tax planning things, then this is how much you're going to have to pay. And, we break that up there. So that's the way, but I don't know how much you would say specifically for your business because I would need to understand how much money you're actually generating. Can I file my W-2 separately for my business if I did not make any money? Or do I need to hire someone to do both regardless of revenue? So you would definitely file your W-2 separately from your business anyway. The W-2 will be filed on Form 1040 specifically, and then your business will be on whatever business tax reform. So Schedule C, a 1120, or 1065. So yeah, you should be doing both. And usually it should be in the same service that you're getting from a tax preparer. I'm not familiar with, with Pennsylvania, Mayana, so I'm not sure. Mayana, sorry if I'm pronouncing your name wrong, I apologize. Can you talk about how credit processing third-party work on tax forms? It reports the business income, but any benefits like deductions like processing fees, etc. Usually that 1099 is then when they're reporting on the tax forms, they're just reporting how much money you've earned, not the processing fees usually. So you have to keep track of all of that, or they lose you keeping track of how much they're paying you. So you just need to it's always great to keep track of your own stuff. Don't rely just on third-party 1099s. So Dustin, you said the process of an annual filing. You need to go onto your Secretary of State's website. Depending on the Secretary of State, they'll have a way for you to file your annual report or your statement of information. So it's all depending on your state. In California, if you haven't filed, what is the penalty? Depends on the level of, of tax that you owe. It's different percentages that I do not know off the top of my head. Second year in business, but yeah, and sometimes you might be able to even get some relief, for being a first year business as long as you get ahead of it. All right, Mion, you say, how much would you say I would need to file for? Last year, I made around 6,000. Well, you would need to file that. So you would just be filing your income and your expenses. Like we discussed. All right, sorry. This is coming. Okay, so I think I got to the bottom. Go back to the chat. A lot of things happen here in the chat. Okay. We didn't file. It's a great idea. What if we have been able to track all receipts, but they're categorized on the average? Yeah, if you're good, if you already categorize everything in Lili, you still need your receipts technically if you ever get audited. Rest of my business this past summer incurred expenses for said registration, have received some donations of money, but not yet sold any product. Does this mean I need to file? Yeah, again, my recommendation is just file what you have just so that you have a record. I have an e-commerce business as well as in person. Do I collect tax amount for mine? You need to check your state to see if what you're selling is, subject to sales tax. So me being an independent contractor, my company take out fees for every trip that we take. They take 30%. Do I need to go back on each trip because they don't have it itemized in our I-1099, add up all the amount and claim that as an expense? My company takes out fees for every trip that we take. 30%. Do I need to go back on each trip because they don't have it itemized? If they gave you, so again, you should be tracking this separately regardless. But if you're saying that, the money that they gave you or the 1099 they gave you does not include them taking out fees, then yes, you need to calculate what those fees are and make sure that you are getting that benefit, of those deductions. I think I should answer your question, Jessica. Not file. I meant say for myself. Oh, okay. Well, yeah. So if you got 6,000 in business income, you roughly would have 6,000 times the 0.153. So you have about 918 due for self-employment taxes, and then I don't know how much other income you might have that would subject to that would you have to think about for your federal income taxes, but you would at least would be looking at about about $900 from your self-employment taxes if you do nothing else. Does the scan code work for existing customer? It takes me to the app, but the promo isn't there. I think this is for a sign up, but I would ask a Lili representative that question. Not sure. All right, so those are all the questions. We got this done a lot quicker than in the past. Again, if anybody else has any questions, feel free to look me up on LinkedIn. Kendale King, CPA. I'm probably the only one there. And then again, you can see the link I have up top if you want to get a quote. So either way, just let me know. But I appreciate you all for, staying and watching the whole thing through. And I'm glad that I could be of help. So appreciate you and have a great day.